Hello, this is the Chart Profit video. Over 90 minutes into the trading day, Friday 1st of September. This is from the pre-open today. We're looking at the E-mini S&P. As we know, the 7-month point of control is at 24.3650, which is here. As I mentioned, pre-open Wednesday up here. The E-mini opened below that 7-month point of control down here, that support, and immediately rallied back, which is a good sign when that happens. Value area was once again generated above that. In fact, all of these value areas have been printed above that long-term support. If we see a value area printed below it, as we've said in previous videos, that would be a negative, but we haven't seen that. In fact, we had aggressive buying marked here on Wednesday, which is a short-term positive sign. I also said that 3-month value area high, which is at 24.5750 up here, I've said that price acceptance rather than quick rejection. If we see price accepted around that level, that value area high, it seems to usually suggest that another distribution, I've said it probably up, has begun. If we have a look at that price action on the current hourly chart, you can see the point of control here, the support, and then we saw a session open, which was here. Immediately the E-mini came back above that level, and as I've said, that's a good indication of strength, that fast rejection to that test. And we've obviously come higher. We had aggressive buying marked in here, price acceptance around this dashed line, which is the value area high, and we're moving onwards and upwards at the moment. There's been some slight improvement in the pulse chart. The momentum has it is negative, but it's turned up, so the momentum, the down momentum, clearly from this is slowing, and we've seen the breadth indication in the middle, the New York Stock Exchange daily breadth indicator change from red to neutral, so there's some improvement there. If we see some green coming in here, it would be confirmation, and if we see the price oscillator or momentum getting back into positive territory above zero here, that would indicate trend up. As we know, the order of events when you see a low being put in is we see the breadth improving, the momentum coming back above zero, but usually before that we get some indication of buying, like here. We have seen it here and again here, just from the profile, the green bars representing aggressive buying on the profile that we just looked at. Looking here at the spider chart, last time I showed this a week ago, 5-month point of control sat here at 243.30, and we saw the support here, but just in the last couple of sessions, point of control has migrated slightly higher to 244.30, and that is now an 8-month controlling price, so that is our first level of support on this chart. On the Russell 2000 ETF at IWM, we saw this probe here. There was strong support here at the 16-month, which is the major lever up here. There was a dip below it, and we recovered. So in the longer term, IWM back in a strong price location, strong position. There is overhead support, the 5-month at 141.30 up here. Interesting development on the UK FTSE 100 chart. Last time I showed the chart, the 12-month point of control was here at 73.46. We'd seen various dips below that, tests down below that level, but they pretty quickly recovered. We've now seen that point of control move slightly higher on the price action yesterday, intraday, to 74.13, so this is now the important level to monitor on this chart. Currently, the end of this week, we're printing above that point of control in a strong position. Let's look at the sentiment. We follow my version of the RIDEX assets ratio each day in the pre-open. Most important event recently was the fact that the ratio reached 15.64 on the 22nd of August, right here, and that is the highest ratio in the database, and historically the ratio hitting a new high has been a warning for the market. Subsequent to that, the ratio actually fell pretty quickly down to 28-day low over here, and we're now rallying back, but this level above 15 up here, we need to watch this, and the ratio perhaps retesting that would be clear evidence of over-enthusiasm from the retail trader. If we look at bear fund assets in isolation, still extremely low. This is the extreme low over here at the start of July. Looking at bull fund assets in isolation, been very volatile last few months. Currently towards the low of that range. If we're looking at the last few months here, the S&P breaks out to a new high. Be interesting to see how this responds relative to these recent peaks. Looking here at the public poll from AAII, the bulls percent was lower this week at 25%. That's quite a low number. That's a 15-week low for the bulls percentage, and the bears percent was higher at 39.9. That's a 25-week high. And the net, the bulls minus the bears, at a negative 14.9. That's a 26-week low. So that's increasing negative bearish sentiment from the public in this poll. Again, this is a contrarian indicator. The best indications come, I think, from watching this black line, which is the 4-week moving average of the net, the bulls minus the bears. Most reliable indications come when the moving average breaks below the previous low point, usually an indication of extreme negative sentiment and therefore potentially good buying points. This is the Investors Intelligence poll. Bulls percent this week was higher at 49.5%. Noting that the previous week's a number at 48.1%, that was a 9-month low. So at this point here on the chart, bullish sentiment was at a 9-month low. You can also see that the net figure, bulls minus bears, 1 week ago reached its lowest level year to date. Still relatively, according to history, reasonably high, but that was a multi-month low. Market currently rallying off that. Just also a note here, Illippi US fund flows this week reported equity fund inflows, including ETF inflows of 6.1 billion in the week to 30th of August on Wednesday. That's the first net inflow in 7 weeks. Let's go back to the charts. We're looking here at TLT, the T-bond ETF. In the longer term, TLT is in a strong position above its 8-month at 121.63, and unless and until that point of control migrates, in the longer term that's the level to watch. And we've seen this higher low above that level. If I switch to a weekly chart, you can see that TLT currently here has given back a lot of the gain it made earlier in the week, but all of this consolidation, this pattern here above this level, means it's a strong chart in the longer term. You buy dips. Just showing the weekends on this daily chart for TLT. I always like to see where Friday closes out the week. A bit messy on the chart here, but I like to see where Friday closes the week out relative to the Monday to Wednesday range. So this being strong close. This is neutral, neutral, strong. It's buying here on the weekly structure, and again here, and again here, and potentially this week. If we see a weak close today, we could see first indication of sellers active if we get a close below this level. Sellers active on the weekly time frame. The fact that the range of the bar would be something like this and above the previous would be sellers active but ineffective. I would assume that would just be normal corrective activity. Back in the middle of July we did some extended analysis on gold. This is GLD. Back over here, particularly when we broke down the commitments of traders report, we said that it looked pretty bullish, and gold, or rather GLD, the gold ETF, breaking back above 119.84, its major point of control, would be a confirmation of that strength. And gold has come quite sharply higher, printing its highest level since back over here last year. That point of control has not migrated, so as long as GLD holds above 19.84 and that controlling price does not move, longer term gold is in a strong price location. And USO, the oil ETF, remains in a weak price location below its major, which is now at 10.14. That became the controlling price, the major controlling price in this period here, and we are now printing below that level in a weak position. Dollar index remains also in a weak position. Just to reiterate, we looked at this last week, found support here at the 2-year, but when it broke below it It broke below that proven support, that 2-year controlling price. It very quickly came lower, and then we built this 3-month at 93.41. It came lower again to a new low and then rallied back to that level. Let's clear the chart, and we've yet to print time back above that minor resistance. So I still see this as an extremely weak chart, this one, the dollar index. This is the pound dollar, 15-month. This is the major level to watch for the long term, 124.78. That is the big support, and all of this puts the chart in a strong long-term position. In the shorter term, we have a 5-month emerged here at 128.84. Currently we're ending the week above that level in a strong position. There's natural resistance here off the Brexit high, we could call it here, to the major low in September. So there's the proven resistance. Price above that would put the pound in a strong, even stronger position. But relative to its controlling prices, we're seeing a strong chart here, strong position currently. Euro FX made a higher low here on its major at 113.29, a powerful pattern when it breaks out to the new high. It's come swiftly higher and it's held up there, overbought, overextended, but the euro is holding up. Finally, this key chart, as I've been calling it, the dollar yen, from this low over here to the subsequent high, we run the halfway point across. That's natural support. We've had that once, twice, and now 3 times. The 2-year point of control is a little higher at 111.30, puts the chart in a weak position relative to that, and price breaking below that level, that halfway point, I would expect the chart to fall pretty quickly if it did that. 3 times support and then a break. Probably see this pretty swiftly come lower. So this is a key chart and a key level, and we talk about that each day in the pre-open. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.